Hi everybody, and welcome to the Luminate Property Market Update for the month of March. We have some great information for you this month, particularly if you're buying or selling property. Stay to the end where we have some really good tips for you. Right, let's get straight into it. Sales for February, 1,796, which was in line with the 10-year average of 1,800. Against January, 906, it looked pretty impressive, but obviously January's not a month we can read too much into, as it's a very disrupted month. Let's talk medium house price. For February, it was $1,010,000. This was a pleasant surprise after a downward trend for the last 3 months. This, in line with the numbers of sales, is one of the positives for this month. Days to sell. In February, it was 55 days to sell a property. In January, 56. This is a little bit higher than the 10-year average of 47 for the month of February, and certainly higher than the 10-year average overall for all 12 months, being 34. What we're seeing here is properties are still sticking and taking some time to sell, a figure that's a little bit concerning, but in line with the amount of stock that we're seeing on the market, the next point that we're about to talk about. For February, it was 31 weeks worth of stock on the market, and January it was 30. So no real movement, but it's still quite heavy with 8 months worth of stock on the market at current sales levels. 10-year average 21, so we're really looking for around 4 to 5 months. With days to sell staying high and lots of stock on the market, this could be one thing that could really hold our prices back and keep us stuck a little bit longer. Right, let's talk about what's affecting our Auckland property market. Let's start with the economy and the talk of recession. A recession is 2 consecutive quarters where an economy contracts, usually measured as a reduction in GDP. For the quarter ending June and the quarter ending September, we had negative GDP of negative 1.1%. We got some positive news last week that we were out of recession with positive GDP of 0.7%. While our GDP is in the positive and technically we're out of recession, we're far from being in a position to celebrate. We're barely breaking even, and in terms of headed into 2025, an underperforming economy is going to be a major factor in both our property cycle and in our domestic economy. Well, it's pretty much the same. We had a significant reduction last year in the number of people coming into New Zealand and a significant increase in the number of people leaving New Zealand. That hasn't really improved. Basically, this is putting pressure on the economy in terms of resources and certainly putting no demand into our property market. There's certainly no light coming from this area. Most people appear to be going for a 2-year fixed interest rate of less than 5%. As opposed to going short term in the hope of further reductions in Q2 or the middle of the year towards the end of the year. Bank test rates are finally starting to have some impact. Over the last 12 months, they've dropped from 8.7% to 6.9%. This has improved some people's borrowing capacity by up to 15%. The next OCR announcement is on the 9th of April. We were hoping for a 50 basis point cut. It certainly is what the economy needs. But given the positivity in respect to GDP last week, we may not get this. What does all this mean for buyers? Well, it's still clearly a buyer's market. Increased stock levels and days to sell, vendors only have 2 options. Take their properties off the market or meet the market. The increased stock levels really do result in more competition and real opportunity for buyers. Developers in particular have to drop prices to get sales, to drop debt, to move on to other projects. Right, what does all this mean for sellers? Well, you're coming into a difficult market. But there is some good news off the back of some bad trends during November, December and January. We had some real positive activity in the month of February. Agents are reporting good levels of inquiry and attendances at open homes, as well as good clearance levels at auctions. The 10-year average for monthly sales is approximately 2,200. If we operate at around 80 or 90% of this, i.e. close to 1,800 for February and 1,800 for March, we can expect to go to market and sell, and once stock levels start to reduce, we may even see some pressure go on prices. Expect some challenging times ahead. If you're prepared to meet the market, however, you will transact a sale. You are in competition and selling times have increased. So don't forget to review our video on how to sell a property in a tough market for tips that may help you get a result. That's a wrap for the month of March. Hopefully you got some useful information if you're buying and selling property. If we can help you in any way with your financing needs, please don't hesitate to give us a call here at Luminate Finance.